This is Matthew Cratter from Trader University, and today I want to talk about whether Dogecoin is going to the moon. I've been getting a lot of questions about this, and I have to pinch myself. I can't even believe that I'm making a video about this coin, but nevertheless, here it goes. It's definitely an interesting phenomenon. It's up however many thousands of percentage points since the beginning of 2021, and briefly yesterday it actually entered into the top 5 market cap coins. This morning, it's dropped back down to number 8, has a market cap, which is just the value of all the coins circulating of roughly 33 billion. What really gives away the big sign of speculative fever here is that we've had more turnover in the coins that's greater than the total market cap. So the 24-hour volume is about 43 billion, 44 billion, and the whole market cap of the coin is only 33 billion. So you can think of this as that more than 100% of the coins have changed hands in the last 24 hours. Or that's the kind of churning or turnover that we're seeing. Now, obviously, Elon Musk has been tweeting a lot about Doge. I wanted to show you some of his tweets, but it looks like Twitter is down at the moment. He's been the main one pushing this. Now, it's important to notice and to know that Dogecoin was literally created as a joke. You take a coin, you stick a picture of a Shiba Inu dog on it, and it's really cute. It's very clever. It combines two memes. It combines cryptocurrency and it combines the Doge meme. And in this way, we live in such weird times, 2020 and 2021, when you have meme stocks like GME, and just as that was the ultimate meme stock, Dogecoin is becoming the ultimate meme coin. Part of this is just the populist revolt that we're seeing. This is what happens when you have an out-of-control central bank that is exacerbating wealth inequality by printing money. You get these strange populist revolts, which are very understandable and perhaps even justified. The problem with this is that there are going to be a lot of naive and innocent people left holding the bag. We're already seeing how Dogecoin is crashing back down this morning from going up almost to 50 cents. Now it's back down to below 25 cents. And of course, we don't really know what the future path is going to be. A lot of this is just pumping from Musk, as we said, Wall Street bets, which seems to be onto crypto, then off of crypto, TikTok videos pumping Dogecoin, Slim Jim, the meat stick company, talking about Dogecoin. And some people are speculating this is a way for Elon Musk to distribute free money to his fans. There is as I understand it, there's a Dogecoin wallet that has more than $1 billion worth of Dogecoin in it. It would make sense that I can only think of a few people like Musk who would stick that much money in there or have a big enough position. The thing about this is that Musk is rich, but even Musk cannot keep Bitcoin levitating forever by memeing it or by buying it. And this is one of the big problems with Dogecoin. If you go back and read the history, it's kind of a funny history where the Dogecoin community raised $50,000 back in 2014 to send the Jamaican bobsled team to the Winter Olympics. You can see the kind of meme culture around this. Also, there was a NASCAR car that was a NASCAR driver, Josh Wise, who was sponsored by, or they attempted to sponsor him in 2014. So this is the kind of weird community that surrounds Dogecoin. But when you think about it as a long-term investment, and maybe no one does, maybe this is just something that you jump on and you try to get out in time, and then you pay short-term capital gains taxes, and then you try to figure out what the next meme coin is to invest in. The real problem, though, if you hold Dogecoin for any significant period of time, there's obviously an infinite supply of Dogecoin available. There's no max supply as there is with Bitcoin, which has a maximum supply cap of 21 million coins. Also, Dogecoin literally has no use case. It's in many ways is quite interesting because it's just a very pure, unadulterated, distilled version of speculation. It's the ultimate speculative asset because it's a cryptocurrency, and it's a cryptocurrency that's built on a foundation of memes. If Bitcoin is cannabis, which has all these medical uses and has been used in every culture for thousands of years, Doge is like the crack cocaine. It takes a medicinal plant and makes it into a very dangerous form and sort of distills the addictive essence of it. You have people like Peter Schiff who are unable. I wanted to show you his tweets too, but he's comparing Dogecoin to Bitcoin and saying that Dogecoin is taking market share from Bitcoin, saying absurd things like this. So this is one problem with Dogecoin, and really most of the altcoins, as far as I can tell, is they really do muddy the waters, and they confuse newcomers. And people also have this mistaken idea that they should diversify across all these coins, which is really a fallacy. When you diversify in stocks, the equivalent of diversifying across a portfolio of stocks, if you're doing that with altcoins, you're actually diversifying across a basket of frauds, pump and dumps, and scams. It's like diversifying across penny stocks. You'll do very badly if you do that. With penny stocks, the thing is you want to pick, if you're going to play that game, you need to pick a winner that's eventually going to become investment grade and have a much higher price and attract institutions, etc. And so this is one problem with all these altcoins, and one reason I hate XRP so much. And it's hard to hate Dogecoin, but it really is. It's going to end up hurting a lot of people. When we look at what Musk is doing with his money, we do know that he's buying Bitcoin for Tesla's balance sheet, not Dogecoin, obviously. So it's one thing to have some fun memeing a coin, but when you actually spend your money, you can tell where people, what people really attach value to. Now, one reason Dogecoin has been going up a lot and can go up a lot is this is very difficult to short. It's like shorting a penny stock. You might not be able to get the borrow, and the risk reward is just absolutely terrible because Dogecoin can go to $3 on its way back to being close to zero. In the same way, XRP has similar dynamics. And when you have this kind of churn going on, where the more than the market cap of the coin is changing hands, this is one way that a coin can go up very much. But it really is like a game of musical chairs, and whoever stays around too long for the party will not have a chair, and will basically have the equivalent of losing their money. I think another interesting analogy to Dogecoin that I thought of this morning was it's a little bit like Dadaist art. This is the famous found sculpture by Marcel Duchamp. It's basically a men's urinal, and he signed it R. Mutt, as in the dog, I guess. This is kind of a similarity with Dogecoin. It's absurdist art. It can be interesting for academics to discuss, but it really is a joke. And Dogecoin really is the men's urinal of cryptocurrencies. When people look back on this era, and when your grandchildren ask you what you were doing during this, there are going to be a lot of people who are buying Dogecoin, they're buying XRP, they're buying NFTs as the world's hardest money appeared on the stage. This is obviously Bitcoin. The Bitcoin is a store of value. It's limited in quantity. It's what the institutions want. It's what sovereign wealth funds are buying. And if you're playing around with these altcoins like Dogecoin, when Bitcoin is still so cheap, Bitcoin, I believe, is going into the millions. It's currently around 61,000. And so you can buy, it's a little bit like buying $1 for 6 cents. The problem is a lot of unsophisticated investors and new traders, they come in and they see the price of Bitcoin, which is really expensive, quote unquote expensive, and Doge is so cheap. Bitcoin trades in the tens of thousands of dollars. Dogecoin trades for cents. And they think one is expensive versus the other. And this is a common mistake. One of the reasons that people buy penny stocks instead of real stocks that have real companies behind them, because they just look at the price tag and they don't understand that there is something called valuation behind it. You need to figure out what the intrinsic value is, or what the proper valuation or the fair value of a stock or a cryptocurrency is. Doge, really, the intrinsic value of Doge, maybe there's there should be a humor premium or a joke premium, but it's basically worth zero plus maybe a couple cents for the community, for the network, and for the meme value of it. But Bitcoin is actually, if you use Plan B's model, which I've talked about in many different videos, or you look at how the network effects are growing, you look at network effect valuations, these sort of things, Bitcoin is actually very cheap. And a lot of people, a lot of new investors probably just don't realize that they could buy a fractional piece of a Bitcoin. And what really matters is how much something goes up over the long term, so you can capture long-term capital gains. And in the case of Bitcoin, hopefully you never even have to sell it. I'll talk about that in a minute. Buying Dogecoin, it's like buying a penny stock instead of Apple or Amazon 5 years ago. Over the short term, you could have gotten higher returns on a penny stock. The real problem is there are liquidity pockets where liquidity all of a sudden dries up, and you can have jump moves where Dogecoin could easily jump from 30 cents down to 10 cents if something changes. And it's a little bit like being in an airplane and it hits a giant air pocket. You're going to instantly fall down. The plane is instantly going to drop. There's not going to be any warning or anything that you can do about it. Bitcoin is very different. Bitcoin has dip buyers, it has corporate buyers, it has sovereign wealth buyers. It even has members of the Fed, like the Dallas Fed, saying that Bitcoin is now a store of value. It's very, very different. And so it's really analogous to buying a penny stock instead of buying one of the FANG stocks or buying a high-priced momentum stocks. And if you watch my videos, you know that a lot of the momentum stocks that I like are high-priced stocks. And new traders will waste their time with penny stocks, not realize that they're better off buying fractional shares of higher-priced stocks and a higher-priced cryptocurrency like Bitcoin. Bitcoin is a completely unique asset. There's nothing like it out there. Bitcoin has many imitators, but Bitcoin is the original, and it is the one that is in the category of store of value, which is the largest use case in the solar system. It's a larger use case than smart contracts. It's a larger use case than meme coins. So when you look back on this point in your life, hopefully you won't look back and see that you were buying Dogecoin and then you still had zero Bitcoin. A lot of people have been asking me, do I feel like I missed out on on Dogecoin, etc. And I think this is a very unhealthy psychology. The first thing when you're a trader or an investor, you never want to look at what the other guy is doing. You never want to get into this fear mode or this greed mode. It can be a real distraction. And I've seen this many times in my life. I've worked at hedge funds where people who were getting $2 million bonuses were very unhappy because someone else was getting a $7 million bonus. And it's very easy to lose track of this sort of thing. The problem with Dogecoin is that it's not a good long-term investment, and it's also really it's a big distraction. One of the things about Dogecoin, every holder of Dogecoin is someone who's eventually going to convert it into fiat. This is how traders of cryptocurrencies think. In other words, they're all future sellers of Dogecoin at some point, so they can buy their Lambo or they can buy another crappy altcoin. This is completely opposite the mentality of Bitcoiners, who tend to have much lower time preferences and are more interested in making money over the long term versus over the short term. A lot of people think that they can trade things like Dogecoin, jump in and out, pay short-term capital gains taxes, which are at the same level as the marginal ordinary income tax brackets. They think they can do this and somehow build up a stack over the long term and use it to buy more Bitcoin. So trading altcoins in order to increase their holdings of Bitcoins. This is a little bit like trading kids' toys in order to increase your holdings of Picasso paintings, or some analogy like that I'm very, very skeptical that anyone can outperform Bitcoin over a significant period of time, call it 1 or 2 years, and on a post-tax basis. So a lot of new traders don't realize really how much they need to pay, though they're going to need to pay in taxes. I'm all in favor of trading. I obviously trade momentum stocks, as you guys know, but momentum stocks are a temporary thing. It does make sense to jump in and out, even if you have to pay the short-term cap gains rate, because most of them will not grow to the sky. They always say stocks are like trees, they don't grow to the sky. The thing about trading altcoins in order to make more Bitcoins is that it's a little bit like this. So it makes sense to jump in and out of momentum stocks because they're not going up forever. Bitcoin, in my opinion, is going to go up for the rest of our lives. It's going to go to 1 million, then 2 million, then 5 million, then 10 million. And so, yes, maybe you can outperform Bitcoin by doing something with Dogecoin for a week or a month or a couple months. But this is, I think most people don't realize what a difficult game it is to play. Do you sell your Dogecoin when it's gone from half a cent to 10 cents? Do you sell it when it gets to 30 cents or 40 cents? What probably happens, and what happens for the most part in markets, is most people, the weighted average cost of Dogecoin for most people will be right up here. And so they'll end up buying at the completely wrong time. Bitcoin has a completely opposite mentality. You buy it, you hold it, you begin to value your wealth in Bitcoin. And you have these long time horizons and this focus on the future. Unlike Dogecoin holders, I'm never going to sell my Bitcoin. If you wonder how that works and how you can still enjoy the profits from your Bitcoin even without selling it, I encourage you to watch this video, how to use a Bitcoin loan to buy anything, where I spend 27 minutes really examining the concept in depth. There's no equivalent of this in altcoin circles. There's nothing wrong with gambling. I don't want to tell people what to do with their money, but as long as people who are trading Dogecoin, they have to realize that they're basically degenerate gamblers. It's okay to be a degenerate gambler. I don't judge you for it, but you're going to end up, you might get a free buffet on the house, on the casino, or some free cocktails, but you're not going to end up rich. Very, very few people go to Vegas and get rich. Probably no one except the shareholders and the owners of the casino. And you have to look around and see the people who are pushing Dogecoin, even people I respect like the Winklevoss twins. They obviously run a crypto exchange, and the more people trade these things, the more money they make. Whereas many Bitcoiners, I give away all my Bitcoin information for free. This is all of the incentives are aligned here, and it's not the same sort of trying to encourage newbie traders to jump in and out and generate a lot of trading commissions. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below and what you think about Dogecoin. Thanks for watching, and I'll see you in the next video.